Hello, welcome to the office. Thought it's been a long time since I've done like an actual video interview or video intro. So, anyway, welcome to episode 93 of the Farm Traveler podcast, especially welcome to our YouTube page. Today we're actually interviewing Farm Together. So, I'm always trying to learn more with investing. Allie and I have started to invest a little bit more as we've gotten older, and Farm Together actually does a really cool job of helping people interested in interviewing or in investing in farmland. And so we're talking with their founder today, Artem, and he's going to do a great job breaking down how Farm Together makes investing in farmland easier and stuff like that. So if you ever thought about actually investing in farmland, you'll like this episode. It's really helpful. Artem did a great job explaining how they select farmland, how they're available right now to only the United States, and kind of their future plans, like if they're going to start doing investing in livestock or expand internationally. So it was a great interview, and thank you. We've made it to 93 episodes, which is pretty darn cool. You can see I'm wearing the Farm Traveler t-shirt and the Farm Traveler hat. I mean, how awesome is this? It's only one of one. Maybe I might make another or order a couple in the future. So we'll see. So I hope you enjoy this interview with Artem and Farm Together. It was super awesome to talk to him. And thanks for watching our YouTube video. Hopefully I'll do some more intros like this. That way you can see me. I can't see you. But anyway, hope you enjoy it. Well, Artem Milichuk from Farm Together. Welcome to the Farm Traveler podcast. How are you doing?
Doing well, thanks, Trevor.
Yeah,
Good to be on your podcast.
Well, thank you. I'm excited to talk with you. So you're with Farm Together, which is a farmland investing company. And kind of before we dive into that, tell us a little bit about yourself and your background and kind of how you started Farm Together.
Yeah, so as you can tell by my name, I haul from Eastern Europe, from Russia, born and raised there, and I moved to North America in 2007, and then was Canada and then United States in 2016, drawn largely by the never dying, relentless entrepreneurial spirit.
Mhm.
Whether we talk about the frontier, whether we talk about people who came here, and through Homestead Act got the farm. So it's kind of same thing has been driving a lot of people, and I was caught by the winds of the promise that the US is. So really excited to be here, and thanks for having me. uh, I kind of my story with Farmland is a little bit of a sort of lucky story where financially, so professionally, I've been in finance for 10 years before starting Farm Together. And the first deals, the first files that was put on would be food companies, and then as it goes, they'll be like, well, now you're the kind of the food and farmland guy, and you sort of get put into that. But I've enjoyed the space tremendously. I think the people are wonderful. I think it's really great to work on something that is so fundamental to what we need to live, and it's never changing, right? um, Fads come and go. Crypto today is hot. Something else will be hot tomorrow. Wheat stocks, GameStop, Tesla, but farmland food is always there, always present. And then personally, it's kind of a bit of the time I was growing up. So for older listeners, I remember Soviet Union, and when that collapsed, we had, well, even before it collapsed, but it was really a very scarce food situation for a number of years, and so we all had this little plots of land that we used to work, and it didn't matter if you were, a factory worker or a PhD. You actually, everyone knew how to farm.
Yeah.
And so I used to work every year in the summer on my grandparents' little plot, planting potatoes and tending to the chickens. And then we ate that during the winters because you didn't have much else. There was not like a Safeway or Walmart. And so it's just something I think really nice, the thought of being able to own farmland. That speaks to me.
Yeah, so I've started to dabble a little bit when it comes to investing. It's been weird watching all this GameStop stuff. But a few months ago, I really honestly had no idea that investing in farmland was a thing. But I mean, it's such a good idea because it's always going to be one of those, I guess you could say, safe bets because it's always going to be there. We're always going to need food. We're always going to have farmland. And so, I mean, what really inspired you to kind of start and create Farm Together? Because I mean, it seems like a great investment platform. And so what kind of inspired you?
So this was around 2015, 16, and I was at the time in Toronto working for Ontario Teachers Pension Plan. which is a huge institution, but it caters solely to the teachers and retired teachers of the entire province of Canada. It's only a few 100,000 constituents, but the assets under management, something like 200 billion Canadian dollars now.
Oh,
It is
wow.
huge.
It
The
sounds
entire
like it.
teachers do very well in retirement. They take care of them. And so this fund, by the nature of its size, as well as by um, the changing demographics of its constituents, which is actually the problem that every single pension fund faces right now, had to venture outside of what a traditional save investing into bonds, into stocks, and then alternatives and everything else. And so when I was there, they were invested into a lot of things, into infrastructure, timber, but they still didn't have a massive presence in farmland. And that just blew my mind because it is such a big market. It is such a vital piece of our lives. So naturally, it should be also a vital piece of one's portfolio. And at the same time, I wanted to invest in farmland. I started to have a little bit of savings, and I couldn't do it personally either. But I had a different problem where there just were not enough retail-facing options. Um, and so I just couldn't stop thinking about it because here was this massive industry, again, absolutely critical to our very survival, and it's
Mhm.
defining of us as a civilization. Civilization really started when we invented agriculture, and yet it was so hard to invest in, so hard to kind of connect capital to farmers and landowners as well. And I was thinking about it for a year, and it's just one of those things that I've never been obsessed about anything in my life as much as about this. And so I started Farm Together in 2018 as a way to really, as the story goes for a lot of founders, to solve my own problem as a professional personal investor, to make it easy to invest in farmland. And then by the extension, to also bring capital, especially creative capital, to farmers, landowners that goes beyond just traditional, mortgage type product.
Right. So you found something that you were interested in and you wanted to do it. And then you also wanted people to have this opportunity to invest in farmland. And so, I mean, how does investing in farmland differ from normal stocks or real estate or something like that? I mean, I know with stocks and real estate, there's a lot of risk. So is there a lot of risk with investing in farmland as well?
So one, there's not a lot of risk based on history, at least. When we look at the performance of the NCREIF Farmland Index since 1992, the volatility there, which is one measure of risk, has been less than 7%, which is way lower than stocks, than publicly traded real estate, a little bit higher than bonds, but not that much. And then if we look at another measure of risk, which is, can I lose my principal? Can I lose my capital? Were there periods where my value of my investments was lower than the amount I put in? Which is, I think, how a lot of us naturally think about risk, right? It's like, how much money can I lose?
Yeah.
When um, the NCREIF Farmland Index had only, I believe, 3 quarters of negative returns. Oh, since 1992. So this is almost 30 years we're talking about. And those negative returns were very low, like maybe very small, -1%, -0.1%. Farmland performed incredibly well in this financial crisis. It was flat to up, where everything was down, 30, 40% in Q1. And Farmland was up 23% in the last financial crisis in 2008-9. So incredibly resilient market. And the way it works, Trevor, is you can think of farmland in a lot of ways like real estate, although it's not quite the same. There's a little bit of infrastructure, a little bit of timber, a little bit of social infrastructure in this asset class. But broadly, there's two ways to make money. One is you buy land and rent it out to a farmer, and that's very common. 40% of farmland today is rented already, so we're not inventing anything new. And then you collect a cash rent, or it can be cash rent plus a percentage of revenue. And then the second approach, which is more prevalent in the permanent crop space. The first one is in raw crops and corn, soybean. Permanent crops is your tree nuts, your apples. Those typically require more of a direct operated model, or at least an involved long-term lease, because you need the farmers to really care about the health of the trees long term. Whereas, if you're just
Mhm.
renting out a piece of dirt, you kind of plant it, you collect it, gone next, right? um, and so the profit and the income there comes from the actual P&L, profit and loss of the farm, where you are running a whole budget and an operating business essentially, but by a third-party farmer who's experienced, know this well, and you collect that income. And those returns are typically higher. So, the net returns annualized on raw crops would be like 7, 8%. Whereas on permanent crops, you can get 10, 11, 12%, and really attractive cash yield, especially if you do development, you can have 10, 20% sometimes and more cash yield in certain years. So it's a really good cash flow product.
Okay, it sounds like it would work for people that are looking to invest in both, whether that's for a year they want to get their return back or somebody that's looking for a return 20, 30 years down the road. I mean, is that kind of true?
That is true. Most of our deals right now are 10-year hold. Farmland is not a short-term investment. You should think about the long term. Um, and then we are looking into introducing even longer hold periods because um, what we see right now is that a lot of our farms go through development and then projected in future years to have really attractive cash flow. But then we are like forced to sell them because the hold period is the hold period. And we have now more and more investors asking, I want to I'm in my 30s. I want to put this, I want to have this for the next 30, 40 years, maybe pass it on to my kids, grandkids. Like, why can't this be a perpetual hold? Like, because nothing's really going to happen to it, right? The only thing to really think about is climate and water. But if we look at places in Illinois, right, prime farmland, it's been farming for 100 years. It's likely going to be farming for another 100 years. Like, why sell a good thing?
Yeah,
And
that's
it's not that
true.
easy to buy a good farmland either. Like, we go to tremendous lengths to find good deals.
Yeah, what exactly goes into your search criteria as you're trying to find farms that investors can invest in with farm together? So what kind of goes into that research you do whenever you're looking for farms?
There's a lot. I mean, our internal checklist is almost 200 steps,
Oh,
but
wow.
to run you through it, it starts with the macro situation, and we look at sort of the large things such as interest rates, trade environment, inflation, climate, and the end product market for particular farm. So if we're investing in almonds, what do we think the global almond market will do? Because farmland produces commodities, oftentimes it's a global market. So that allows us to set the stage and kind of pick our target markets. So for example, right now we are somewhat trepidatious to look at dairy because there have been so many headwinds and it's been a tough market. We don't touch livestock right now because, well, A, it's more complex in some ways, and then B, there's a lot of uncertainties right now around the livestock market. So we deal strictly in permanent and crops. Once we kind of get that initial macro view squared away, we then look at a particular region and one, you can't get away from California because it produces half of our fruits and vegetables, 80% peanuts. And so in California, you have to look at water. And if you do water right, you can be really well off. If you do it wrong, you could be in a lot of trouble. So we spend a lot of time underwriting water well. And then there's a lot of things that are done at farm level. It's due diligence of soil, of the tissue, the capex improvements if there's needed some like irrigation. We do due diligence on the operator, looking at the track record, checking references, and then there's also a lot of legal paperwork that we really streamline for the investors, for ourselves. Because one thing we want to do is to also use a lot of technology to make it easier for us to find, invest, manage a farm, and then we can pass on those savings to the investors and to the farmers. Because right now it's a very kind of inefficient and somewhat opaque market in a lot of ways. There's no like Zillow or MLS for farmland. There's no Bloomberg for farmland. And so a lot of times it's about finding information. Yeah.
Right, that makes sense. So for investors, this is really giving them kind of a higher profit, safer bet as opposed to real estate and traditional stocks. How exactly is this helping out farmers in the long term? I mean, is it giving them cash where they can grow their operation? So how exactly is that helping out the farmer?
So right now we have found one really strong use case, and there's many more that we're kind of conceived. Just we're only 3 years old, so give us some time. But the main use case we found is for farmers who are kind of professionalizing their business. Oftentimes, it's kind of the next generation. Because the average age of farm is approaching 60. A lot of farmers are retiring, and a lot of kids don't want to farm. But the kids that do stay back are going to do really well, I think. And so in these cases, a lot of the times it's about the farmers finding land that they know is for sale, and then us buying it, and also financing either the development or renting it out to the farmer who brought it to us. For farmers, it's really very creative capital because we can structure things in a lot of different ways. Sometimes the farmers, so as an example, we are working with Oregon hazelnut farmers. We buy the land. We sometimes put capital for development. Sometimes the farmer will develop it, and then in 8 to 10 years they will buy it back from us at a predetermined price. And then they get to also collect, the revenue from the farm. So it's kind of a fixed rent plus a revenue share, and that's really attractive for us because the returns on those are net 10%, which I think is with very low risk quite attractive versus the alternatives we just described. And for the farmers, it's them not having to invest $2-3 million into the land that then doesn't do anything, and actually being able to spend that money to develop the property, to do another property with us and another, so that you can scale your equipment, your knowledge base, right, your people over large margin acreage by going down this route. Another approach is working with farmers that want to do organic conversion. It's high risk business, so we finance that and we buy land and we transition to organic. Sometimes it's more of a easier buyer. Like we have been an incredibly good buyer. We're very quick, very transparent. So we've been working now successfully several estates where farmer passed away. The land is in a state that's for sale. Their kids don't want to continue farming, and the state kind of trustees found it hard to actually sell it. There's a lot of complexities in it, maybe with a deal. So we come in and we will deal with all those complexities and then buy it at still a really good price, save them on the broker fees as well. So we found that to be really successful. And at the end of the day, I think like if any of the farmers listening reach out to us, we'll figure out a way. Like, come to us with your problems. What are you looking to do? Let us work with you because we're a startup. We're excited to be in this space, and we are very creative in thinking how we can solve a particular problem and particular capital need.
Right. That's awesome. That's really good to hear. And you brought up something talking about organic farming. I mean, is there really a push for the sites you're buying to be regenerative, to focus on sustainability? I mean, are there any instances there where you're wanting the farmers that are working on that land to be a little bit more sustainable?
Yes, there's a huge push, well, from kind of the planet, from but also from our investors. A lot of our investors, both in Farmland as well as Farm Together Inc., the parent company, uh, invest because they want strong kind of triple P returns, like planet, people, profit. They want sustainability goals met as well. So one thing to mention, we just recently announced that we joined a new standard called Leading Harvest. It's a US standard created by the farmland investment industry that holds ourselves accountable to third-party, auditable, verifiable goals around sustainability. So we committed to 100% of our farms reaching that in 3 years. So we do push for that. Secondly, the farmers themselves oftentimes see that there is higher returns and more differentiated business to be had if you farm organically, sustainably, regeneratively. There's now new labels emerging. There's companies that want to pay you for your carbon, for carbon credits. So there's definitely a business case to be done, which it should be, right? Farmers are not necessarily like making millions of Wall Street. This are people running high risk businesses. So overall, yeah, there's both a push from everyone. Honestly, it's the main bottleneck is just the skill set, the time it takes, the knowledge base, especially regenerative is still early. There's not enough tools, not enough best established practices. So that's a big part of our mission, is to drive regenerative agriculture.
Gotcha. That sounds good. So going off of that, has COVID-19 kind of impacted it at all? I mean, people have been getting, we've been getting, checks in the mail from the government to help all during that time. So it's been a weird time financially. So have you had any impact on Farm Together from the whole COVID pandemic stemming back from like 2019?
So on the farms themselves, on the value, we have not seen any negative impact, and in fact, the values keep going up. We just saw, especially in corn, soybean, the prices are going up like crazy. In other markets as well, we did see some short-term pressure on like almond prices. The logistics have been impacted by COVID. The ports in San Francisco, LA was slower. There's been some kind of issues there. So overall, also almonds are like a snack that's used in travel and in hospitality. So industry hit the most by pandemic. So definitely some sectors have had a short-term hit, but what happens in farming then typically is that some farms will kind of go do something else. You kind of, it balances out eventually, right? And our farms are always in strong water districts, so we don't feel kind of a pressure there. But yeah, definitely have seen some short-term hits to the pricing in some of the farms, but those prices are on strong recovery path right now. And then on the demand side, by investors, we've seen just an avalanche of demand for safe, stable assets. Inflation is something people are worried about quite a bit, and farmland is a great inflation hedge. So we've seen, I can't tell you the numbers, but we've grown by, not percentage points, but like factors of X
Oh, wow,
this
that's
year.
awesome.
Yeah, we've grown significantly. I mean, it's been hard to manage at times, but I think we've done a good job overall. So we have, hundreds of investors now and dozens of projects and opportunities and plots.
Do you think this will lead to kind of more long-term investments with farming because of the pandemic? Like people want a safer investment no matter what might happen?
Absolutely. I think same as with 2008 crisis, you get a new generation that thinks stocks only go up and forget what volatility is. And then this happens. So we have a lot of people that kind of newly converted, but also a lot of our clients are actually older. So they've gone through a few of these cycles and they value stability, they value diversification. Um, so seen a lot of different client personas that have invested. You have tech people that want to diversify from, high risk, high reward career and portfolio to something that's like stable. We have people who are farmers who just firsthand know that this is a good investment and they ask a lot of good questions and they have, specific areas that they like and regions. There's all kinds of people. There's retirees, there's younger people investing. Definitely a diverse set of investors.
I can imagine. So, I mean, you kind of just said a minute ago with technology. I mean, there's been this huge boom with Silicon Valley and all these tech startups like you guys, where I think the merger of technology and agriculture is kind of been at the forefront. And so, do you see potential tech investments with things like Farm Together, where you can invest in not only farmland, but you can invest in kind of emerging technology in the ag industry?
I don't think so. I think it's a very different business,
Hmm.
but we are excited about the technology. There's something new coming every year, and we uh, do have a um, plan to actively help farmers on our farms adopt the technology. Because when you look at it, it's still like a pre-iPhone, if you will, situation. There'd be like 100 different providers. How do you choose which ones to work with? How do they all talk to each other? What's the return on capital? What are the risks? Do I need this? And so what we'd like to do is to be a center of excellence and expertise for farmers so that they can come to us and say like, hey guys, can you just recommend us like the best solution and help us negotiate the best price? And so I think as we grow and we grow in scale, we also will start having some pool with the tech suppliers, with input providers, to also help the farmers working, on farm together farms earn a little bit more through that kind of scale.
Gotcha. All right. So, going off a little bit, for anybody, what kind of advice would you give for anybody that might be looking to invest in farmland for the first time with you guys? I mean, what are some factors that they should research? What are kind of the beginning steps working with you guys? So, what kind of advice do you have there?
Yeah, so the first step would be to go to a learning center at farmtogether.com. We have a lot of easy to kind of understand one-on-ones on thinking about farmland. We have a few white papers. We have a risk paper describing the risks of investing in farmland. And then secondly, listen to some webinars that we do for our deals as well as with our partners where you can also ask questions. Um, those webinars typically focus on a specific deal and it's a very kind of clear to follow format where we talk about the market, how do we find the deal, how does the deal generate revenue. I think that's the easiest is to look at actual deals and check them out. Um, You can also always schedule calls with us. Email us at info@farmtogether.com. We reply to every email. Our goal is to hit 24, 48 hours for response to every investor. Schedule calls with us again. Then maybe once you're ready, put a little bit of money because nothing beats the real thing, and see how it performs. We aim to provide at least annual updates and hopefully in the future also quarterly updates. Um, but technically and sort of logistically, it's very easy. You can register in a matter of minutes. You can invest in a matter of minutes, linking your bank account, signing documents, sending your tax documents, looking at your investment. All of that is done online electronically.
Gotcha. Now, what about farmers that might be looking to get people to invest in their land? What kind of advice would you give them?
Yeah, that's a great question. And one is reach out to us. Maybe we can work together. But if you want to do it yourselves, it's I think most important is to just have a clear historical information of how the farm has performed, a clear plan going forward, and it doesn't need to be too complicated, right? It can be quite high level, but for an investor, they're not going to be able to really analyze whether this many tons of fertilizer is the right amount here. So it's just being able to trust you. And so initially, it might be easier if you do like a revenue share or a rental model, say a lease back, or you jump maybe into profit share, something more complicated. Um, but yeah, I think um, it's very, in a way, it's simple, not easy, but it is simple because really what you're investing in is a productive piece of soil or an orchard that very clearly grows stuff that everyone needs and it sells that stuff. And your question is for how much stuff will it produce and how much will it sell? Really, that's what it comes down to. And then if it's a profit share, how much money does it take to grow this? And so if you can get comfortable, understand those three factors, get comfortable around the market, are people going to stop eating almonds? No, they've been eating almonds for 5,000 years. Right?
Yeah.
Then you can easily invest. And for the farmers, I think they'll be able to really turbocharge their business because there's so much value in the actual land that they own and how they can leverage it in different ways. And even more so, actually, I would say the only thing more valuable than land is the farmer. And that's why we always want to do right by the farm because, talking about risks, land has indeed a lot of inherent value. But one case in which it doesn't have value, well, besides water, is there's no one to farm it. And so the farmers, I think, have this tremendous skill set and experience that is so leverageable, scalable across many acres, right? They could be farming so much more around them. And so I think that's what we'll see is somewhat consolidation of farming because the the retirement kind of this gap is real and there's way few farms that we'll have in the future. But the ones that we will have just by the virtue of supply demand, right, I think will do really well. I want to say Jim Rogers or Warren Buffett said like farmer will be the new, tech job of the 21st century, the new finance job. So don't quote me on that, but definitely like when I look at the opportunities and the farmers we work with that kind of do it professionally and thoughtfully, I mean, there's, I think, a lot of money to be made.
Yeah, that's a good point. Because I mean, what might work in Illinois might not work here in Florida. And so those farmers are going to know that because they usually have decades of experience. There's so much technology in there. And talking about your supply and demand point, I mean, when you're investing in farmland, you're investing in something that's always going to be in demand because people are always going to want to eat. They're always going to want food, obviously. And so you're investing in something that is always going to be in demand. And sometimes the supply might be a little low, so the cost is going to go up or the price might go up. And so the demand's always going to be there. And so it seems like it is a really safe investment. And I mean, those farmers know the inputs that they need, they know the crop, they know the farmland. And I mean, it's not going to be something like a GameStop, for example, where you have people on Reddit influence kind of how crops are grown. So it's going to be a lot safer of a bet.
Yeah, and the unfortunate equation is that we have decreasing supply of farmland. About 15 million acres was lost in the United States alone from 2012 to 2017, which is more than twice the size of the state of Massachusetts. We have growing population that's projected to reach 9, 10 billion by 2050 and on. So we have less land that needs to feed more people, and not just feed, right? We're not talking, let's just put some protein bar, like that movie. What was it? Snowbreaker? With where there's like a train. Anyway,
Oh, Snowpiercer. Yeah, where they make like a
Snowpiercer,
bug bar or something. Yeah, that
a
was
bug bar out of protein, right?
yeah, good movie. Good
Yeah,
movie.
good movie. So we don't want that. We want people to eat healthy. We want to eat a diverse diet. And there's still not just more people, but improving diets. Even in the United States, we have food deserts, right? Some of the food that we grow, I mean, even when you eat organic, you can just taste that it tastes better, right? Like you feel that. But organic food has lower yields per acre. So if we want to truly feed everyone healthily, all 9 billion people, the way that the top 1% eats, that has a lot of food that needs to be grown. And so farmland, I think, is really, really the demand supply is there. And then right now in places like Africa, Brazil, they burn down forests to plant, which is then, screws up the carbon capture equation. And then if we need farmland to also start becoming carbon sink. So yeah, the humble piece of land has a lot riding on it in the next 30 years. And I think people who invest in it and support that will do well.
Yeah, that's a very good point. So, is this just available in the US? Are there future opportunities to invest kind of outside the continental US? What's going on there?
International investors right now can invest as well.
Okay. That's awesome. So do you see something like this kind of happening around the world where, say, I'm in Florida, I want to invest in some farmland in Mongolia or somewhere? Do you see that as kind of the future too?
I think so. Farmland is a very sensitive topic for a lot of countries. It's a point of national sovereignty. So in US, US is very protective of its farmers, of its farmland. So I would say overall, yes. And we are, as our long-term kind of ambition is to be global, to let people invest in Australia, in Canada, in Mexico, which I think would be slightly better than Mongolia.
Yeah.
No offense, Trevor. um, but yes, I think that it will see more of that kind of creative capital flowing to farmer, because right now farmers lose out so much, not just in the land investment itself, but in invoice financings, in working capital financing, in the price they get for it. There's a lot of, I think, money being lost in the process, even in the payments. Right now there's still a lot of like paper checks flowing around, and
Mm.
things can take 30, 60, 90 days to clear. So I think there's just a wealth of work to be done.
Yeah, I can imagine a lot of ways to kind of improve the system. And I mean, it sounds like Farm Together is one of those ways to improve it. Well, Artem, this has been phenomenal learning about you guys at Farm
Thank you.
Together. If people want to learn more, where can they go to learn more about you and Farm Together and kind of how your farmland investing works?
Farmtogether.com, best resource. Our team put a lot of effort into it. Info@farmtogether.com to get in touch with us directly.
Gotcha. All right. Well, best of luck with Farm Together. As soon as my wife and I, we just bought a house. So as soon as we have up some more savings, we're going to look at Farm Together
Yeah,
and see how that
please.
goes. So
Thank
yeah,
you.
absolutely. All right.
And
Well,
congratulations on the house.
thank you. Appreciate it. Appreciate it. Yeah. We'll be in touch, and thanks again for being on.
Thank you, Trevor.